It's time for the Personal Finance Corner, and today we're going to put the spotlight on MNC fund. Not a bad time to be looking at an MNC fund, Faye.
That's right, Sandeep. So these funds are very interesting. They were launched at the time when MNC was, there was a charm to it. It was something that was exciting in the Indian market. But interestingly, they have managed to do well. And we're going to find out from Dhirendra Kumar through his fund review if the Birla Sunlife MNC fund, which is a fund that's done really well over the last couple of years, if that's a fund you should be adding to your portfolio. Dhirendra, thank you so much for joining us on this segment. We have a lot of questions from investors writing in about these funds. Now, we know the MNC fund aims to invest in MNCs listed in India with a long-term growth trajectory. Let's look at the Birla Sunlife MNC fund in particular. Tell us how it's different from, say, a diversified equity fund that follows maybe the Nifty or the Sensex.
For a variety of reasons, whether it be history, legacy, or the way the Indian economy opened, or the character of those such companies which are MNCs operating in India for a long time, there's a very distinct character of the underlying portfolio. The MNCs which we see today, there are sectors MNCs are completely out of it. For example, if you look at financial services, we don't have a leading foreign bank which is publicly traded or listed in India. The prominent name which you can, a stock which you can buy is ING Vaishya, which happens to be the biggest holding of this fund. Likewise, we don't have too many other cyclicals or the mining or the metals which is listed in India. So we are left with a very select universe of FMCG, pharma, some automobile, and so it's a constrained portfolio. It is a portfolio which we don't find. Many sectors are not, we don't find MNCs present in those. So it has a very distinct character, and it has come, this healthcare and FMCG focus or dominance of such companies, that has come in very handy in the past 4 or 5 years. That has boosted the returns as well.
All right, so healthcare and FMCG are normally defensives, which has obviously come in handy because over the last year, this fund has given returns of 17% compared to the Nifty that's done about 16.3%. Now, what kind of investor would you recommend use a fund like this? Can it be the only fund in my portfolio, or should it just complement the equity diversified funds I have already?
No, one is that it is not a substitute for your equity diversified fund, so it should not be the only one. It is a compromise on diversification. It generally happens to be a reasonably high quality portfolio, and if you want a relatively lower volatility, a steadier take, and this is the kind of fund which actually did very poorly in the period 2004 to 2008 when the market went up substantially. We saw the market on the Sensex going up by 5 times. This fund was not able to keep pace with that. It has recovered or gained all the ground in last 5-6 years. So that is something which one should take note of, that in a racy market this fund will be left out.
All right, so it's an interesting take for a conservative investor. It gives you the defensives all wrapped up in one neat package, the Birla Sunlife MNC fund. Dhirendra, we have a question from a viewer. Safia has written in. She has 3 lakh rupees in a fixed deposit that will mature this month. Now, she wants to know if there's a way she can invest this money in a mutual fund, earn more interest than a fixed deposit, but keep her money 100% safe. What would you recommend she does, Dhirendra? What mutual fund will keep her money completely safe?
No, the liquid fund and the short-term funds will actually is reasonably safe. It is not as safe as fixed deposit, but just as much, very close to that. But I would suggest a slightly interesting, an unusual take, where her principal will be completely protected for the kind of risk-averse investor. At the same time, it has the potential to generate meaningful accumulation. What I would suggest is put your money, 3 lakh rupees, into a post office MIP. You will get a monthly income from that, and make a SIP of the monthly income which will generate. So this way, your capital will be completely protected in a Government of India's, deposit scheme, and all the gains will be getting into equity, which if you keep doing it in a disciplined way, has the potential to, accumulate into something substantial.